welcome. You're watching Market Fatafat on ET now with me, Snehi Shah, and with me is Ankita Saxena. Ankita, wishing you a very good afternoon. And well, market's not doing much at the moment, rather flat. Nifty Bank, however, doing rather well compared to Nifty. So tell us what's the market looking like.
Well, yes, Snehi, you're absolutely spot on. In fact, Nifty hit record highs yesterday and we did see some bit of selling pressure coming in on Nifty today. It opened the day in the red and continues to trade in the red. It is below the 22,400 levels. It did scale yesterday and we did see the selling pressure come in after that, and the market breadth is also in favor of declines right now, and the market and the broader market is also underperforming the benchmark indices, especially the small cap space, which is under selling pressure. It is down over 1%, but as Snehi also mentioned, Nifty Bank is where the action is. Sharp recovery seen in Nifty Bank, though it's up 400 points from the day's low. In fact, Nifty also, we did see a recovery of 100 points from the day's lowest point, but nonetheless, Nifty Bank is where the action is right now. PSU banks are also powering away in trade. It is up 2%. Central Bank, UCO Bank, IOB, all trading with the gains of over 4%. Nifty Auto also hit record high, led by Tata Motors. Of course, we'll discuss that later. Balkrishna Industries, Tata Motors is also the top Nifty gainer. In fact, the auto sector, like I mentioned, Tata Motors, M&M, Maruti, Bajaj Auto, all are trading with the gains of more than 1% in trade. On the losing side, we have IT that is really taking it on the chin, down more than 1%. Metals, FMCG, media, all are facing selling pressure right now. In fact, DB Corp and Network 18 are trading with cuts of more than 5%. So that's where the market is at, Snehi.
Alright, Ankita, so with that, let's kickstart this edition of Market Fatafat, and we'll be taking you through all the stocks that are buzzing on the back of their news flows and technicals in under a minute each. On the technicals today, we are being joined by Osho Krishan of Angel One, and well, on the fundamentals today, we are being joined by our team of researchers, Ashesha as well as Gaurav. Wishing all of you all a very good afternoon, and with that, let me kickstart the show with the first stock that I'm going to be talking about today, and that is Exacom. Now, this stock has made its D-Street debut today. It is listed on exchanges at a premium of 87% and witnessed a solid debut on the bourses today, listing at 265 rupees a piece at a premium of 87% over the issue price of 152. Now, the Gurugram headquartered EV charger manufacturer aimed to raise 429 crore through its IPO, which comprises of a fresh issue of 329 crore worth of shares by the company and an offer for sale component of 70.42 lakh shares worth 100 crore rupees at the upper price band. The promoter Next Wave Communication will be sharing shares in this OFS, and the issue has received a healthy subscription of 129 times on 29th of February, which was the last day of bidding, and high net worth individuals. So HNIs were at the forefront of this IPO, subscribing 153.2 times. Retail investors picked 119 times, while the QIB buyers bid 121 times for the allotted quota. So well, this IPO did see healthy listings and healthy subscriptions, and on the back of that, listed also with a very solid premium on the street today, Ankita.
Well, yes, but the other stock, the stock of the day, perhaps Tata Motors, which is also the top Nifty gainer, that's firing away in trade. The news is that the board has approved the proposal of a demerger of Tata Motors Limited into two separate, separately listed companies now. The commercial vehicle business and its related investment would be one entity, and the second would be the passenger vehicle business, including the PV, EV, JLR, and the related investments into another entity. Now, the demerger could take further 12 to 15 months to complete. The word that's coming in from the chairman, N. Chandrasekharan, is that he says that the three automotive businesses units are now operating independently and delivering consistent performance. Demerger will help them better capitalize on the opportunities provided by the market, and this will lead to a superior experience to the customers, better growth prospects for the employees, and enhancing the value of the shareholders as well. What the analysts feel is that this is sentimentally positive for the company, will help define capital allocation policies better going ahead, and won't change anything from a valuations perspective. Also, we saw brokerage notes come out this morning on Tata Motors. Nomura is maintaining a buy with a target price of 1,057 rupees. JP Morgan is maintaining an overweight with a target price of 1,000 rupees, and Macquarie is maintaining an outperform with a target price of 1,028 rupees on Tata Motors. This stock is definitely the pick of the day. Tata Motors for you.
Well, all right, with that, let's also get a view on the technicals coming in. Osho, I'm going to come to you. Let's talk about AB Capital, which is your first pick of the day. When you look at it on a 6-month basis, rather flat move coming in, not much happening over there. What's your move over here? Can we start expecting to see some uptick on this stock now?
Very good afternoon, everyone. Well, yes, as you have said, the counter was into a corrective phase till the December 2023. But if we are witnessing or if we are looking at the technical charts, that the developments over January 2024, then the counter have started making higher lows kind of a pattern. So this is the first sign of reversal in AB Capital. And also in the last 2 months, the counter has sustained above all its exponential moving average, especially the 200-day SMA, so which is a very positive development. So from here onwards, I am expecting the counter should move on the higher end in the cycle of higher highs, higher lows. Immediately 200 being the psychological mark can provide some kind of resistance for short-term trader, but for a longer duration, I am expecting 225 to 240 as the target in short to medium term perspective.
Right, coming to you then, Ashesha, you picked out the IT pack for us. In fact, like I mentioned at the start, that IT pack is really taking it in on the chin. It's down more than 1%. I believe it's on the back of a downgrade coming in. Do take us through the note.
Yes, it is on the back of a report that came in this morning. In fact, CLSA has come out with a note on IT stocks where they've downgraded two counters, TCS and HCL Tech. First up, let's talk about TCS, where CLSA has downgraded the stock to sell from their earlier underperform rating. They've maintained their target price at 3,925. The stock currently trades at 4,020 odd levels. For HCL Tech as well, they've downgraded the stock to sell from their earlier underperform rating with target price of 1,536. They say 2024 growth outlook continues to remain weak, which is not reflected in valuations. 2024 guidance from global IT service companies does not reflect confidence, so that is why they are negative on many of these counters. They see downside risk for FY25 estimates, and they also believe that mid-single digit revenue growth guidance that will be given by HCL Tech and Infosys in April 2024 will also be a negative. So bearish report that has come in on IT counters, the stocks are under pressure today.
Asha, thanks for taking us through that. Osho, let me come back to you now. Let's talk technicals again. And you've picked out Bata India for our viewers. When you look at it on a 6-month view, it's in the negative, a downtick of 16% coming in the last 6 months. So tell us, what are you penciling in for this stock going ahead then?
Counter definitely is into a downtrend, but the positive thing that I am observing in this counter, that in the month of April 23, it has made a bottom of approximately 1380, 1400 odd levels. Currently, it is hovering, or it has hovered near the same 1400 odd levels. So this point has already provided a strong cushion to this counter, and from there onwards, we have seen an upsurge towards the zone of 1750. And today also, we have witnessed a strong traction in this counter, and on technical parameters, there has been positive crossover from the oversold territory. So from here onwards, I am expecting that there can be a breather in this counter from the corrective phase, and one could definitely see an uptrend for a shorter target of 1580 on immediate basis, followed by 1700 and 1750 from medium term time.
Coming to you then, Gaurav, AAS Financiers, this stock is knocked down more than 4% in trade today. Tell us what is really pulling this stock down?
Yes, so for AAS Financiers, basically 12% of the equity has changed and in a bunch of trades. And why this is important is that if you look at the stock's current market price, it is at a level where the stock was 5 years ago. And if you look at the AUM growth for the stock, it was at 22% CAGR for the last 5 years. And with this price decline that we have seen today, the price to book value for AAS Financiers has come down to 2.5 times the price to book value. Whereas if you look at the peers of the AAS Financiers, which is Aptus and Home First, so Aptus trades somewhere at 4 times price to book value, and Home First also trades at 3.2 times price to book value in a forward PB ratio, and that is why this puts AAS Financiers as one of the stocks in focus, because this decline in share price, which is almost down 4% today, has actually also impacted the price to book value. And despite being a strong performer, the stock has performed. I mean, the stock has gone down in the price today because of the block deal that has happened, where 12% equity changed hands.
All right, Gaurav, thanks so much for taking us through that. 4.5% downtick for that stock. But viewers, with that, we'll slip into a very short break on this edition of Market Fatafat. We'll be right back with more stocks for you, so stay tuned. Hi there, viewers. viewers, welcome back and thanks so much for staying tuned to Market Fatafat. Let's continue talking about all the stocks that are making the buzz today. And well, let's talk about the second new kid on the block today, and that is Platinum Industries. Now, this IPO listed at a premium of 35% on the D Street today, and Platinum Industries stock listed at a 35% premium over the IPO price, but it was still under the GMP expectation of a 50% premium. The stock opened at 225 rupees on NSE against the issue price of 171, and the 235.3 crore IPO issue was subscribed 99 times. So strong subscription figures also coming in for this one, and qualified institutional buyers picked 151 times the allotted quota. Non-institutional investors 141 times, and the retail investors bought almost 51 times the quota. The IPO issue comprised of a fresh issue of 131.37 crore shares by the company at a price band of 162 to 171 rupees per share. And well, Platinum Industries manufactures PVC stabilizers, CPVC additives and lubricants as well. So whilst decent listing at least for this stock on D Street today, Ankita, 35% premium is where it listed at.
Clearly a lot of action in the primary market.
Absolutely.
Then. But moving on to other stock, Osho, you've picked out Indraprastha Gas for us. This counter hasn't done anything for the investors in the last 6 months. In fact, it is last 6 months it has eroded investors' wealth. But what are you penciling in on the charts for this one? Is it time that this stock really picked up?
See, overall, in the last 2 to 3 trading sessions, there has been a lot of traction seen in the gas distribution company. So IGL, if we will be seeing the technical charts of past 3 to 4 months, then from there onwards, it has been hovering in the cycle of higher highs. Currently, with the recent development in the last 2 to 3 trading sessions, the counter has came out or came above the 200 exponential moving average, and even has surpassed the sloping trend line. So that is a very positive development on the technical front. So from here onwards, one can expect that there can be a gradual up move in this counter. On immediate basis, the resistance is seen around 470 to 485 odd levels, but once it surpasses the zone of 485, then from there onwards a strong traction can be seen for the higher targets of 500, 510 on immediate basis.
All right, well, another stock that is one of the primary buzzers today is IIFL, which is knocked down 20% in trade. In fact, it's still locked in the upper circuit. I beg your pardon, a lower circuit since morning. Now, the thing is that the RBI has directed IIFL Finance to cease sanctioning, distributing and selling any of its gold loans to any new customers, and that is happening with immediate effect. Now, the company has been permitted to serve its existing gold loan customers through the usual collection and the recovery process. But in its inspection, RBI, they found out and observed certain supervisory concerns in the gold loan portfolio, ranging from deviations in assaying and certifying the purity and net weight of the gold to breaches in the LTV ratio. Now, on the back of that, we did see, IIFL knockdown in trade, but we also had a brokerage note come out today. In fact, market has given this news a thumbs down. And what is expected of IIFL gold loans going future? Well, the supervisory restrictions will be reviewed upon completion of a special audit. And Jefferies, like I mentioned, is still maintaining a buy on the counter. It is maintaining a target price of 786 rupees for the counter. But for now, IIFL is knocked down, locked in lower circuit.
Well, all right, let's move on from that news flow then. And Osho, let me come back to you on the technicals. Piramal Enterprises is the stock that you've pointed out for us. So what are you seeing on the charts for this one? What's the course going ahead?
Counter has been in a consolidation zone for past 3 months. So from the month of November, we are witnessing a very strong or very stiff consolidation in this counter. So from here onwards, on the higher end, if the counter is able to breach the zone of 980 to 990 odd levels, then we can witness a strong traction of another 100 odd points in this counter. And on the vice versa, on the lower end, 900 should be acting as a very strong support zone. So for the traders who are going to have or who will be willing to gauge the momentum, it is very much advisable to keep a strict stop loss of 900, and on the higher end 980 can give a very strong thrust in the counter in the coming trading sessions.
All right, moving on. Shesha, you picked a delivery for us. I believe it's coming on the back of a brokerage note that's upgraded the stock. Do take us through what's powering the stock.
You're right. It is on the back of a brokerage report that came in this morning. The stock is off the highest point, but despite that, sitting on with gains of nearly 1%. So Kotak has upgraded delivery to buy from their earlier ad rating. They've also gone ahead and upped their target price to 570 from their earlier target price of 500, indicating nearly 25% upside from the current market price. They say conditions are apt to take the bold call. As far as e-commerce players and their positioning is concerned, they say e-commerce players are now realizing that there isn't another delivery. Delivery business model will magnify gains on account of volume gains that the company will enjoy in the quarters to come. Peers have limited defense against the pricing pressure of delivery, and that makes the positioning of the company very strong. So they've upgraded the stock with a revised target price of 570. They've upgraded it to buy rating. The stock is gaining on the back of this report that came in.
All right, Ashesha, thanks so much for taking us through that. Reviewers, with that, we'll slip into just another short break on this edition of Market Fatafat. We'll be back with more stocks. Please stay tuned.